All right, good morning, Kumatelevu. How are you? Nihama? Hello. Oh, yeah. How's your mum? Good morning, everybody. Welcome to Forex.Today, the YouTube community of almost 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning trades. Dollar pairs, euro pairs, pound pairs, gold, oil, Bitcoin, and whatever you want. Let me remind you that even when you're planning your trades in advance, trading is risky and not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne. Let me know how I can help. I'm a currency trader. I have a background in macroeconomics from the big H. Cool. Huh? You like that? Yeah. What else? That's it. I've been doing this a long time and I have formal education in the thing that we do. So maybe I can help. Maybe you can jump ahead, leap ahead. I spent many years just figuring out the basics because there was no one to help. Well, now I'm here to help. If you look at the description below, there's resources also available to you, like how about 6,000? Hey, good to see you, Robin. Is the wedding over? We all done? It's legit now? The old ball and chain ankled. Yeah. Well, congratulations. So ask questions, get involved. You'll see in the description below a link to 6,000 videos on YouTube. You might have to Google them if you want, but they're on the Forex.Today YouTube channel, the Trader's Way YouTube channel, the FX Bootcamp YouTube channel, the FX Street YouTube channel. So think of that. Many thousands of videos on probably an hour each. All of those are made available to you absolutely totally free. TT says, Nat Gas still a bull? Dude, just look at the fundamentals. I don't have an opinion. There's just fundamentals. Okay. Hey, good morning, Raven. Good to see you back. They finally let you out of the mine, huh? Yeah, Hope's like totally still a bull. But but the question is posed like maybe I have an opinion, like I have a guess. I have a no. There's just look. It's facts. Anyways, that's how I look at it. Also in the description below, a link to my book, a link to fxbootcamp.com. A link to the oil trading course. Yesterday, we did legal contracts and legal structures of oil and gas deals. We also looked at compliance in the scope of potential oil reserves, probable oil reserves, proven oil reserves, and the impact on valuations for investment opportunities in the oil and gas industry, because that's what we do. I don't think any of us are going to go into the oil and gas industry, although now you know a lot about it. We focused on the money part yesterday, which was pretty cool. TT says, Jackson Hole, any ideas? Yeah. But again, why would you care about what I think might happen? Okay. What I think might happen is Jay Powell feels like he was misunderstood. So he's going to try to remedy that. Okay. So that'll be interesting tomorrow. Also in the description below, you'll find a link to tradersway.com. I find that they're an ethical and trustworthy foreign exchange broker that has a business model built around your success and not trading against you. I think that's unique in this business. I think you should have a service provider that has a business model like that. I think if you look for the cheapest, you might be a fool. No offense. I don't like anything cheap. I don't like to overpay, but I don't like anything cheap. I like value, and I find my relationship with tradersway.com valuable. They offer value. For example, they pay great swaps. Thank you, Traders Way. So if you open up a demo account, maybe they'll earn your loyalty and respect like they earn mine. You should go try them out. Matrix says the Fed is going to exercise blah, 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 blah. Well, we don't know. But since I am an economist and I understand macroeconomics and I understand the tools at the Fed, I think the Fed's going to raise interest rates higher than what the market is priced in. And I don't think they're going to cut interest rates very soon after we reach the terminal rate. But that is being priced in. So I think the market is quite wrong, in my humble opinion. But you asked for my opinion, that's my humble opinion. I think the market's wrong, and I think the Fed is struggling to communicate. Hey, maybe they're just a bunch of nerds. They have trouble talking to jocks. Okay, fine. That goes back a million years. Or maybe market participants are going through sort of wishful thinking. Could be. Maybe many market participants are traders, but they're not economists. And they don't quite get it. Well, that's possible too. One thing that might impact inflation is our trading partner, China. And China announced yesterday, let's see, I got a report here. Oh, look at this. Check this out. I designed a BMW motorcycle. Look at that. I just did that on the BMW website. It just happened to be up here. It's nice, huh? Yeah, I think it's nice. No, that's BMW again. Oh, this is where I want to get to. China announced that they're going to add to their stimulus package. Is that right, Matrix? You don't like that one? To me, it looks old school. Oh, I lost it. There it is. To me, it looks old school, like kind of World War II. There was a 3D model. Maybe I can go back to here. I think that looks like World War II, kind of old school. But I murdered out some of it. It's got a lot of black. Look at all the black everywhere. I even put the little cell phone bag on the tank and stuff like that. I kind of like the chrome around the black engine, but the chrome pipes and the oil covers and stuff. I don't know. Anywho, I think it's all right. Yeah, it looks very nostalgic, but, you know, it has like reverse assist and it's easy to start on a hill and, you know, you need it to work for a yuppie like me. Anywho, so China adds, right, to a stimulus package, and like sort of a central bank intervention, they are meaning not intervention in the currency, but into the market. The government, through its central bank, is going, right, allows the banks to invest into infrastructure projects. Okay? Not inflationary. Okay, that's the right way to do it. The government gives money to the banks, and the banks should invest it into infrastructure. So two things. It will not be inflationary, and it should shift the steady state, if you're familiar with the solo growth model. Because there will be a return. If you actually build infrastructure projects, you get a return on your investment. It's not like giving people with no money. There's no return on that. So anyway, so that's interesting, but really it's still not nearly enough, but it's something. So this is in response to the bad news that occurred last week that really pulled down Aussie dollar, but Aussie dollar's recovered. Something else I found interesting this morning that I thought I might share with you. You like my new yacht? I just bought this yacht. It's older. Got it cheap. It's older. It's not bad. There's just one little problem. I took it for a test drive. And I messed up. This is the Coast Guard coming to save me and my family. See, it was yesterday. So I decided not to buy it, actually. I was really close. I put the down payment, and then I'm like, nah, I don't like it. I'm like, doesn't float very well for $8 million. I'm a foul. Old Golden Bone says, I'm a foul. Well, all right, I'm a foul. Anyways, yeah. So, yeah, I backed out at the last second when I had to jump into the water. Yeah, I would, yeah. My friend is thinking about buying a yacht, and I'm like, Yeah, so anyways, I had a conversation with him about that. Well, I know Golden Bones, but it's just funny. It's even funnier when you say, I must be a fowl. Well, better than a peacock. All right, so anywho, let's take a look at the world as we know it. It's the end of the world as we know it. Yeah, Darko, $8 million for that old boat. $8 million, still worth $8 mil. I think it was like 128 foot. That's a nice boat. Okay. Anywho, dollar is gaining strength, which is something I want. Euro is recovering a little bit, but it makes sense because we're hitting monthly targets. Pound is weakening again, which great. That's what I want. Aussie still going up. Well, I guess it started going up a few days ago, maybe on anticipation of a response from China. But anyways, Aussie was way down because of the bad Chinese news, week and a half ago. And then it started recovering. I'm like, wow, that's a little surprising. I'm surprised that it's recovering so quickly. And now we got a stimulus package out of China. And of course, who's going to benefit from that? Australia. Okay. Canada's still doing well, which is great. And yen, I'm just, once again, I'm either selling the yen or not trading the yen. And I made that declaration a couple, 2 or 3 weeks ago. So, what I'm trying to say is nothing has really changed. So let's just see where we are and where we've been, where we might be going. Okay. And you can see, even though the US dollar has been quite strong, Aussie is even stronger. And I don't want to buy that. But one of the things I've been recommending for a while is you can sell pound Aussie for example, here we go, pound Aussie. Okay. That's a fundamental trade. Okay. Fundamentals have been pointing down on this pair for many weeks. And this is now the new lower low. Very nice. Very nice. And then you can zip over and say, well, how about euro? And that's another one that has been fundamentally trending this way for a while. Here we are. And it too has now made a lower low. Look at the nice little day trade there, huh? Beautiful. Day trade entry, day trade target. Notice we stopped on the day trade target inside of the weekly target. And, you know, just two shakes of a lamb's tail from like monthly support, but not the target. The actual target is 141. So you got another, I don't know, buck 50 to the downside. Sweet. Lovely till you mum. So great. Once again, the fundamentals haven't changed, but they could have. And I'm quite surprised how quickly Aussie recovered. And now with the stimulus package, I understand the recovery more, because what China announced might not be enough, but it's a start. At least they're not saying, oh, it's just a consequence of our awesome COVID policy. Now they're like, you know what? We need to do something to help. We need to stop the consequences of our policy actions, right? So it's the beginning of something cool. Could be. Okay. Could be. Ooh. All right. So, pound dollar, we've been moving along and we have hit the daily 5 EMA and it held. That could be very good. That's good, Richard. I don't know if you're part of the super secret fundamental alert service, but the super secret fundamental alert service has been pointing down on those pairs for a very long time. Cool. All right. Kiba dollar. Okay. It's kind of rolling, which is fine. And euro dollar. Okay, once again, you can see we're playing off this line. And on the daily, we're probably waiting for the 21 to catch up. Or tomorrow, we simply find out the Fed is thinking 4% or higher. Or at least the market interprets that the Fed is thinking 4% or higher. Right now, what is priced in, and we've known this for a very long time, but it's good to review it, 3.75%. So if Jay Powell's speech is interpreted tomorrow that this is increasing to 4.0 plus, well, then that would bring dollar strength. And sorry, says gold. Well, if you're selling gold, then we probably agree with each other. Okay. So right now, what seems to be in play is an eventual move like that. So why don't we get together this afternoon and plan a swing trade? Okay, so I'm going to make an announcement. The swing trading group and the day trading group are going to meet at FX Bootcamp at 4 p.m. and plan the trade before the Jackson Hole meeting and all of next week. Okay. Richard says gold has changed in polarity. Define polarity. I think what you're saying is from positive to negative. If that's the case, I would say it's never been positive for a very long time. Probably hasn't been positive in 2022. Then you might say, well, Wayne, it went up for a month. Well, no one was buying it. No institutional investor, maybe a bunch of retails. But all it did was go up and then come down. Profit taking, re-entry. Easy peasy. Because the fundamentals haven't changed. Okay now. Okay. So, so everything is still just doing what we expected it to do. Aussie is stronger than it was. Euro is pausing for a bit, waiting for the moving averages. Pound is trying to weaken again. Remember, it was very, very weak. And then for the last several days, it's paused. So again, we're waiting for these moving averages to push them down to the next level. Another way of looking at it, of course, is we're just waiting for tomorrow's speech. Okay. And tomorrow's speech, I would guess, if you want me to guess, that Powell's going to say, look, you misunderstood me. I was telling you that we're probably not going to continue raising at 75 basis points. At some point in the future, we're going to have to drop to 50 basis points and then 25 basis points. But we're going to continue raising interest rates indefinitely. So we're changing the velocity in which we raise rates. But I'm not trying to hint that we're near the end. We have 8 and 9% inflation. So we haven't talking about the end of raising interest rates. We've only talked about slowing the velocity because we're nearing the neutral rate, the historic neutral rate. And we also know these impacts have a lag, so we kind of want the economy to catch up. But when you look at employment data, and again, I'm talking like Jay Powell, when you look at the employment data, we're not even close to where we think the natural rate of employment is. Too many people have jobs. Okay. So now speaking as Wayne McDonald, not as Jay Powell, what does that mean? Too many people have jobs. When you look at the data, people getting hired now are earning more money than they used to. And also when you look at the averages, now that we're adding these people to the workforce, productivity is falling. Now, maybe it's not their fault, but it kind of looks like it is. So there's people that should probably be unemployed have jobs because when you hire them, they don't do very good work. Now, some people are going to get really upset by this. All I can tell you is once we got to a certain rate of unemployment, so once we went from 4% unemployment to 3.9, 3.8, 3.7, 3.6, right? As we got above that 4.0, productivity per employee started falling dramatically. Okay. X-Trader 1 says lots of low quality jobs. Well, look, people with high quality jobs didn't lose their job, X-Trader 1. Okay. Now, I don't have a lot of friends, but I don't know anybody that got laid off during COVID. If they had a job, They continue to have a job. Okay? But sure, I know people at hotels and restaurants and bars and stuff lost their jobs, but also went to a lot of restaurants, and many had staff. At the worst point of COVID, they didn't, but I still went to restaurants, and and I still went to hotels. But then after a little bit, like literally after 6 months into COVID, restaurants were generally open, and they had some staff. And you can go on through life. Outback Steakhouse in my town has been unbelievably busy all the way through COVID. So it's like, some of them are, let's say, low quality jobs, but those jobs were the ones that were cut. And of course, we're adding back. Okay. But the curious thing is, now that we're at very historically low levels of unemployment, wages are up and productivity is down. And there's only so long until the companies say this is inefficient, it's a waste of money, because they can't pass the high prices to customers. So at some point they're like, okay, we added a bunch of people, our expenses went up, our profits went down, we didn't really achieve much more. So we'll go from, let's pick on a company that had 10,000 employees. Okay, let's go back to 9,500, because when we added the last round of 500 hires, it really didn't make a difference. So we'll just cut them and go back to the 9,500. Okay? Something like that. I don't know. But when you pay more and get less, it's a recipe for layoffs. And the Fed knows this. Okay. Lots of new jobs created are not for the middle and are not in the middle and high end. Well, once again, I'm going to argue with you. There are over 2 million jobs available right now, ex-trader, and most of them that are not getting filled are not waitresses. They're not people cleaning rooms at hotels. It's not employees at car washes. Okay? If you have a background in artificial intelligence, there's 25 jobs that you can get, and they'll compete with each other. But there's also a shortage of concrete workers. There's a shortage of roofers. There's a shortage of electricians. There's a shortage of plumbers. So skilled trade is in huge demand. And then in technical know-how, huge demand. I was just on the Freeport website because I was doing research on the liquid and natural gas facility that they have and the damage that occurred not long ago. And I spent some time going through the jobs available. That's what the Wayne do. Yeah, it sounds like fun. Guess what? There's no job for businessmen. But if you're an engineer, if you know maintenance, if you are on the maintenance side, okay, or the engineering side, they have lots of jobs available. So that comes from research, and I did a lot of this at Harvard, where you look at JOLTS. Let's do this. Let's just clear this, okay? Blanca. Okay? You look at JOLTS, which are job openings. JOLTS. Okay? And then you look at, let's say, I was going to put NFP, but then you want to, it's the reverse. It's not how many jobs are added, but how many are unavailable. But So I guess we'll put unemployment. Unemployed. Okay. Now, this is the number of jobs available. This is the number of people looking for jobs. And this is significantly higher. So I wouldn't say, well, in America, the numbers are BS because the only jobs they're adding to the economy are crappy jobs. No, people that don't have jobs seem to not have the skills required to be employed in our economy. Okay. I know someone who had 2 children and a husband. And by the way, husbands are like a third child. And while she was raising her 3 children, her husband and 2 kids, she worked nights and weekends at Stanford, not worked, but studied nights and weekends at Stanford doing advanced mathematics and machine learning, and got a graduate certificate, not a degree, a graduate certificate in artificial intelligence. And on the day of graduation, got a job offer from Apple, and she's worked there ever since. So the theory, and I know a lot of people are not going to like that, I know the theory is the waitress at Applebee's could do the same and go from waitressing to programming artificial intelligence at Apple. It's just going to take some time and some money and some effort and discomfort and sacrifice. But we know it's hard because she probably doesn't think that way. And that is a challenge because then, well, back in high school, the waitress probably should have taken advanced math classes and algebra classes and calculus and trigonometry and mastered those, got A's. And you're like, well, no, she kind of flunked out of those and, whatever. We all have sob stories. But the thing is, society wants you to go from unemployed or wants you to go from waitressing to doing artificial intelligence programming or whatever we're talking about. Another friend of mine, she did material scientist. She was an alchemist in the Silicon Valley in super high demand. Super high demand. She's super smart. And one day we were talking and I gave her some advice. She says she wants to quit her job to pursue her passion for the fashion industry. She wanted to design and make clothes and sell them as a boutique, designer. And I'm like, oh my God, that's so great. But you're a material scientist. She's like, yeah, it's good. It pays really good. It's not really my passion. She just had an engineering degree. And I said, oh my God, don't quit. I said, go to your boss, look your boss straight in the eyes and say, I want to work part-time so I can focus on my passion of designing clothes. But even though I'm only going to work part-time for your team, I need you to pay me my full salary or I'll have to quit. That's my advice to her. And you know what happened? Despite very few people listening to me, she took my advice, walked up to her boss and said, I want to work half as many hours, but you have to pay me my full salary. And they said, yes. And then after a while, she did well enough on her own where she eventually did quit the job and focused on her passion. Love it. Success story. But it's only because her value contribution to society was so great as a material scientist that they couldn't afford to let her go because there's no one else to replace her. So when the economy hits recession, people like that don't get laid off. there's a lot of people that can be a waitress at Applebee's. So they add and subtract on and off, or they hire you, but you don't get quite enough hours and all that kind of stuff. Okay? Matrix says, I'm about to get a lot of women fired. I think a lot of women should quit those stupid jobs and become their own, employers. I think women have a much sounder sense of reality and would make much better managers, significantly better managers. Oh my God, most men are deadbeats. And then what? Planning, accounting, and finance. Women are so much better at that. So for running a small business, yeah, I think more women should be independent. Yeah, for sure. Anyways, so going back to what I was saying, you can't say, well, the U.S. is just adding a bunch of crappy jobs. The bigger challenge is the only jobs being filled are with people that are very low skilled. And that there are millions of jobs for skilled workers. Millions. And once you get their job, you don't lose it. You could have a zombie apocalypse and you're not going to lose your job because the amount of value you create to society is too great. Okay? For example, we're in the middle of a zombie apocalypse, let's say, and a pipe bursts in your basement. Oh, well, I can't call a plumber. There's zombies everywhere. Of course you're going to call a plumber. Problem is we don't have enough plumbers, and the plumbers that we have are fairly mediocre because they have almost no education. We don't have enough plumbers because we tell everybody's got a college education. So they go to college and rack up a huge debt. So no one can afford to be a plumber, even though they're probably more apt to be a plumber. They have a debt at a very mediocre school, which leads to a very mediocre job, adding very little value. You're a night manager at the Taco Bell or something because you have a business degree from blah, blah, blah university, which probably doesn't require a university degree to do that job. Meanwhile, we need a plumber. And because, I don't mean anything offensive to plumbers, but maybe the plumber is the kid that never had a chance to go to university, so he became an apprentice as a plumber. But what I'm saying is, wouldn't it be interesting if more people got 2-year degrees instead of 4-year degrees, and you got 2 years of education on plumbing or electrical work, right? You become an electrician. So let's say every journeyman, but let's say apprentice, every apprentice electrician, every apprentice plumber, every apprentice carpenter, let's say, has a formal 2-year degree. That would be, on average, a much better plumber, a much better electrician, a much better, framer or roofer or whatever, general contractor, and not have like this dichotomy of you either go to university for a minimum of 4 years or you never go to university because, I don't know, you didn't have a foundation during high school to be able to qualify. So, it's kind of like one or the other. No, I think we need more in the middle. Okay. Okay. I'm surprised, like when you go through corporate America And you see people doing not all people, of course, but many people in these large organizations doing very basic, almost menial work. And they all have 4-year degrees or better. That's it. You're like, really? To do paperwork and answer phones. Okay. So anyways, like, that person might be better off with just 2 years of education instead of 4. Anywho. All right, so waiting for that EMA to catch up. Whoop, whoop. Bum ba bum 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 bum. Bum 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 ba da boo ba da boo ba da boo. I'm gonna change that to I guess a da. Oil still not going down. Okay. Matrix says, I applaud boldness. There's a story where Steve Jobs and Steve Wozniak, they built a Apple One and were giving it away for free, like it was all open source. So then Steve says, man, we need to make this computer ourselves because actually most of Apple One was just basically a board. And then people said, no, we want the whole computer. Like literally it was a board. They're like, no, we want the plastic case and be able to plug in peripherals. And we want you to actually build the whole thing. So anyway, so they got the idea for Apple II. But of course, Steve and Steve didn't have enough money. So they went to Commodore. Remember Commodore 64? And they got the sales pitch from Steve Jobs. Well, Woz was there, but Steve was the salesman. And they explained how they wanted it to be, amazing and beautiful and all that kind of stuff. And Commodore didn't have that kind of culture. They just wanted cheap. Cheaper the better. Like, the people don't want color. People don't want pictures. But, they were a big, powerful company. But anyways, Commodore says, yeah, sure, we'll make your computer. What do you want? And so I think they were offered like $25,000 a year salary, and like $100,000 or something to build Apple II. And Steve said, well, Steve Wozniak thought this was really good. Oh my God, 25 grand. Plus money to kind of build the prototype and the first Apple IIs. He was thinking about doing it. And Steve Jobs, going back to the Matrix, saying, I applaud boldness and especially knowing your worth. Steve Jobs said, well, wait. Our salaries need to be at least $250,000. And that was the end, because really Commodore wanted cheap. And that's not how Apple revolutionized the world, by cheap. No, they wanted quality and they wanted awesomeness, color, pictures. Can you imagine? And then Atari, they pitched Atari because they used to work at Atari. They went to Atari. And Atari said, we're working on a game called Pong. So all our employees are focused on making a game called Pong, and you could plug it into your television. We're going to revolutionize the world. And that's what Atari was focused on, their contribution to society. They're like, we love this idea of this little computer that everyone would have at home, and you could program it and put a bunch of software on it. But they're like, we're just too busy making Pong. And of course, the opposite is also true. And I'm going back to Matrix comment on, I applaud your boldness and especially knowing your worth. Most people don't know their worth. Most companies don't know their worth. Matrix says, unless you turn party into a business. Actually, a friend of mine in the 90s turned parties into businesses, which was really cool. He started throwing parties and then putting people on his email list back when email lists were new. And you could only get invited if you were a friend of a friend and you got on your list. And the parties got bigger and bigger. And it wasn't just like parties at nightclubs, although he did that. It'd be like there was an annual like beach trip where everyone would go to this beach and he'd have oysters for, 300 people and all that kind of stuff. We had a lot of fun, and it got bigger and bigger until one day he threw a Halloween party and he rented the Fairmont Hotel in San Francisco. Let me put this up. Fairmont Hotel, San Francisco. Let's go to the website. Okay, he rented this hotel. And you're thinking, oh yeah, that's nice. He rented a room, a ballroom. Let's go back. Oh, he rented a ballroom? Look at all these ballrooms. No, he rented all of them. He rented the entire hotel. And you know what happened? He sold 3,000 tickets, but 8,000 people showed up. The fire department shut it down. The hotel was freaking out. There's just thousands of people walking around the hotel, going from room to room to room, and they're outside, and they're on the decks, and they're in the hallways, and they're in the lobby. But there was another 5,000 people out front, and it was like a mob blocking the street and the sidewalk, and Nob Hill's not a big place. And the fire department showed up and everything, and the fire department shut it down. There are cops everywhere. So anyways, yeah, he turned partying into a business. Yeah. So if you were in San Francisco in the early or let's say mid 1990s, probably who I'm talking about. And it's cool because he was a personal friend. So, after a couple of the parties, like I'd share a cab to get back to my part of San Francisco with him. So it was kind of cool to be on the in, be in the know. So, yeah. Okay, so oil. Okay, we're just stuck here. You got to mark the top. And then you got to find your line. And you can see we're in the gray box. So this is the right time to get serious. You're like, what? The gray box? The gray box? What? The gray box matters? Oh my God, the gray box matters. Look, the gray box. The gray box, right? See how the moves? And now we're just starting the gray box. Okay? Time of day. Okay? This is gold, and I'm a bear. Yep. Okay? We are now one standard deviation from the mean. Yep. You guys remember that from Sesame Street? Telephone. Yep. Yeah, I'm a bear. Frankie's like, hey, news coming out of OPEC. Well, then get ready to trade. Let's get ready to trade. Yeah, all right, good. Game on, Bubba. Do what you got to do. Okay, we're in the gray box. That's the one that matters most. I wonder, some of this I don't think I can actually turn off. I'd have to go 0 on everything else. None. 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 All the rest of your love. Okay, cool. Anywho, lots of opportunity in this world. Can we do Bitcoin? Yeah, I'm happy to do Bitcoin. There's Biddy. Still not doing anything. Still below 22.3 is my number. It's actually probably 22.3 up to 22.5. We're nowhere near that. So you could look at things. I have it marked so many different ways. So let's break it down. Okay. The trend is this way. Price has been moving this way. And price is, and I'll do this in yellow, moving this way now. So your planning could be, your planning, what happened? Oh, it's changing color. Your planning could be this next. What do you stink? Smell like a plan? Easy peasy. Can I do Dixie? Well, I don't have Dixie proper, but I have my own Dixie. I know you're thinking I'm going to make a Dixie joke. Okay. Cool. That's that. Ba 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 da ba 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 ba. Okay, so let's review the world. Once again, not my opinion. This is a move up. That vertical line is the June Fed meeting. And then there's a little give back going into the next meeting. And Jay Powell was misunderstood for a couple of weeks. Oh my God, they're dovish. No, they're not. Okay? No, they're not. That's a misunderstanding. And the whole time the dollar was weak, I talked about that. I don't think it's right. I'm a bull. Then we recover. And I would imagine, now tomorrow's going to be important to this. Okay? Tomorrow's speech is going to be important to this. And what I'm anticipating is that we have continued, right? Until we get closer to the September meeting. But the September meeting is very late. It's the 20th. 21st is the announcement. So what I would expect, okay, what I'm planning on, I should say, is that this goes up for quite some time, and then we have a shallow pullback as we approach the middle of September. So let's say up for 2 or 3 weeks, up until maybe the CPI reading around the middle of the month, the middle of September, around the 15th. We get CPI, and then maybe we fizzle and wait for the September meeting because maybe CPI isn't as high as it was. So now people are like, oh my God, right? Peak inflation has occurred. This is definitely going to mean the Fed's not going to raise interest rates as much as we've been planning. And you get this kind of move for 5 or 6 days. We have a downward move into the Fed meeting, and then something like that. Okay? That's the world according to my thoughts, my analysis, and my research. Right? That's my humble opinion. Like the late, great Eazy-E, right? He said, don't quote me, boy. I ain't saying shit. That's what I put together for me. You need to do the work and quote yourself. Listen to Eazy-E. Okay? Do your own research. Do your own opinion. Don't ask me, and then don't go to 3 other YouTube live streamers because they're probably not actually qualified to answer to the question. They'll give you an opinion, but they can't back it up. You don't want to listen to people on CNBC and Bloomberg, and you don't want to quote journalist majors writing for a financial magazine. I think you should get the data yourself and interpret the data. Because I don't do those other things either. I don't listen to other people's opinions. I don't listen to people on TV. I don't read newspapers to get other people's opinions. I just get the facts, the economic data. I have the same data that the Fed has. So I can analyze it and make decisions. And you should not rely on anybody else's opinion. I wouldn't even want to know someone else's opinion. Okay? I've had some very passionate conversations with other professional Forex traders, and I value their opinion, and they value mine, but we could certainly disagree. And they're wonderful conversations. Oh, so great. But it's more of a challenge than a lecture, you know? But listening to a talking head on TV, or even worse, I bumped into something. I don't know. I can't remember what it was. It might have been a podcast about Forex traders or something. And they had some guy, some kid, in my opinion, because I'm old now. I'm almost 50. So there's this kid that, looks like he could be my son. And he's the expert on Forex. And he was bragging about how he had over 5 years of experience. Oh my God. That's it. Wow. That's pretty easy to become an expert. That's it? Oh my God. Is he licensed and registered? No. Does he have a formal education? No. Does he have 20 years of trading experience? No. You're like, oh my God. And that's an expert. Crazy. So be careful, man. Be careful. Moses wants to know about Elliott wave. Does it work? Well, first of all, it's a strategy. Okay. Oh, Frank wants to know, do TV channels pay the analysts to mislead traders? No. No. Okay. I've been on TV several times and nobody's paid me. And certainly I was actually ambushed by Fox Business to be, ridiculed. And I fought my way out of it. And I'm the one that looked good at the end of it, I think. But anyways. But does Elliott wave work? Well, it's a strategy. It's a process of analyzing. Does it work? If you do it, yes, it works. Does it make you money? No. Are you going to be profitable? No. So I would say, what are the components that go into Elliott wave? What is it that Elliott wave is trying to accomplish? And so we'll open up a chart here. And we'll do this, and I'll put it on a basic setup here. Okay. All I have here is moving averages. What is Elliott wave doing? It's helping you ride a trend. So therefore, it's a trend trading tool. Does that work? Yeah. What's the second thing? It incorporates Fibonacci, which means you have a lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. And then inside of that, there are periods where there's a correction. Okay? And then some sort of resumption of the trend. Does that work? Yeah. Fibonacci is measuring when price pulls back. Oops, let's make that a different color. When price pulls back, how far did it pull back, which would help you predict how far it's going to go. How far did it pull back? How far is it going to go? And then when there's a correction, okay, what you're looking at is really the same patterns, but on higher time frames. So on a higher time frame, the only thing that occurred is something like this. Okay, on the higher time frame, there was a lower low, lower high, and a lower low. And Fibonacci is trying to figure out, going back to the blue, okay, oops, that's too big. The price action inside, price action on smaller time frames that are part of the basic moves on the higher time frame. So you're kind of doing multiple time frame analysis, price action, Fibonacci retracements and extensions. And that's all it really is. And all of that totally works. And I teach all of that. But I don't teach Elliott wave. And the reason I don't teach Elliott wave is I hate the idea that this has to be a one wave and this has to be a two wave. And if this is a three wave, this three wave has to be longer. And then four wave and a five wave. So I do see it. Like, it does make sense. First leg down, second leg down, third, fourth, fifth, three wave correction, and then resumption. Okay. Yeah. But I'm not going to count these things. I'm just not that kind of person. It doesn't fit. Okay. It doesn't fit my personality. And I'm not going to make a trade because this is a five wave, therefore this will do this, and therefore because we've done the 1, 2, 3, then we're going to resume. And like, I just don't think that way. It's too rigid. It might work for an accountant. I think people that have an accountant type personality would probably do very well. And I don't have that personality, right? So therefore, I do the same thing, but more fluidly. Ultimately, if you looked at what I teach and what an Elliott Wave trader does, would be very similar. But then I think if you did something different than me, different from Elliott Wave, you did some other thing and you were successful doing it, you would be doing pretty much the same trades that I'm doing and that the Elliott Wave trader is doing. So you would do one process. You would do one process. I'd do a second process. An Elliott Wave trader would do a third process, and it would all equal the same, most likely. Because all the techniques, all the strategies, and all the tools that we employ tell you to sell high and buy low. And then you qualify this. You sell high in a downtrend, and you buy low in an uptrend. You don't need to know anything else. Everything else is just layers of cake and icing. Let me tell you how easy this is. And I'm trying to show you that it's not easy, but that you make it way more complicated than it is. Is this an uptrend or a downtrend? It's a downtrend. You'd have to be an idiot to say it's an uptrend. Okay? So the second thing is now you sell high. So your job is to find periods where you think it's high. There's different techniques. I can see price action techniques. I can see moving average techniques. I'm sure there's Elliott Waves in here. But it's like not complicated. So does Elliott Wave work? Yeah. But you don't need it. Do moving averages work? Yeah, but you don't need it. I think the most important is price action. Pivot points and price action and Elliott Wave and moving averages and oscillators, they're all trying to tell you the same type of things. Is the trend down and is price high? My whole entire book talks about this. That is the whole book, by the way. Strategy first. And I don't mean which. Do you use Elliott Wave or do you use something else? I don't care about that. That's not strategy. That's your technique. Are you a bull or a bear? Okay. This market turned bearish right here, according to my book, and has never been bullish. Okay. That's strategy. To me, that's it. The market is now bearish. Go ahead, sell highs. Sell at resistance. Now, if you want to use Elliott Wave, you say, okay, it dropped this far and made a 382 retracement. It dropped this far and made a 50% retracement. Dropped this far, made a 50% retracement. Dropped this far, made a 382 retracement. Okay? Dropped this far, made a 50% retracement. Cool. Look, that's enough. Bravo! Bravissimo! That's it. Strategy, and this other stuff is called tactics. Sell, 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 sell. Tactics. But for some reason, the human experience is to make this 1,000 times more difficult. I don't know why it is. And the story I typically tell in this situation is when I was invited to the first Forex Trading Expo in Las Vegas, the very first one, and I'm invited to be a keynote speaker. They put my face on the website. They put my face on the advertisements as one of the top speakers at this conference. And I'm like, oh my God, but I'm a nobody. I'm a nobody. What am I going to do? I'm going to be up there against real traders, real professionals, people working at brokerage firms. Right? Ashraf Ladi, Todd Gordon, Rob Booker. Who else was there? I'm missing a couple of names. I used to see these guys like 3 or 4 times a year. Anywho, I get there and I do my stupid little presentation. I felt dumb, so I put a lot of work into it. And I'm like, look, dude, this crosses down, so I sell the 5/8 crosses. Most of the time it works. Sometimes it doesn't. Most of the time it works. Sometimes it doesn't. And I'm like, so here's what I do. Here's my secret. When the 21.55 crosses down, I only sell. And I'm thinking like, I'm such an idiot because nobody taught me. You got to remember, I'm self-taught. And I'm like, oh my God, I'm so simple. And then I have to go, okay, so now I only sell, and it comes to the moving averages, and then I sell it. It comes back to the moving averages, and I sell it. And I come to the moving averages, and I sell it. And I come to the moving averages, and I sell it. It comes back to the moving averages, and I sell it. And this is the fair market value. So if suddenly we break through the 55, I stop trading, and I let it reset here. And I don't sell off of that, and I don't buy off of that. I just kind of see what happens and allow the 21.55 to regroup and then show me direction. And if it does turn up and we start trending above the 200 EMA, then I only buy dips. And that's the whole thing. And I broke it down, called it a smart plans, right? Because that's nice and marketable. And this is, of course, the outline of my book, right? And then I go see another speaker, and he speaks for 45 minutes about his Gartley patterns and stuff. And I still don't, to this day, trade them. But he's like, look, if you get this pattern and it looks like this, then it means something, and you want to look at this angle and that angle and this angle and that angle and this does this and this does this. And I'm like, oh my God, I am an idiot. What I do is so simpleton. And I never even thought of measuring these angles and that this, you got to fulfill this other thing. So therefore it's going to do, I'm like, oh my God, I'm such a chump. And then he gets to the end of the presentation and then he notices that he made a mistake. There's a mistake on his slides. He doesn't have enough time to go back and fix the mistake and explain what he meant to teach. And then we all just stared at each other. It was really awkward. And he's like, nah, I can't really fix it. I can't go back. There's not enough time to re-explain everything. But, and we still have 15 minutes. Any questions? And I felt so good because the whole time he's trying to explain these angles. And I'm like, dude, why wouldn't you just sell it here? Right? I'm like, why wouldn't you just sell the pullback? Why do you need to have this strange pattern? So I'm not against it. Look, if you like that stuff and it works for you, please use it. Okay? Please use it. But I don't think it needs to be that complicated. So use whatever tool. See, look at this, right? There's a Fibonacci retracement. Sweet. Perfect. There's a Fibonacci retracement. Perfect. There's a Fibonacci retracement. Perfect. There's a Fibonacci retracement. Look, perfect every time. Fibonacci retracement. It's perfect. 50, 50, 50, 50. Why is it complicated? Because you're not doing the work. So maybe if you do more complicated work, it gets easier. No, it doesn't. I think most of it is you're not doing the work and you're not doing it at the right time. You're not thinking forward, you're reacting. Okay? So like what I teach, for example, is you have this lower low and you see the resistance in here, okay? But I'm saying when we're down low, okay? When we're on the lower low. So what I teach is you do something like this. And then, of course, make sure everything is protected. Done. So now I have a limit order with the 33 pip stop done by the algo and a built-in limit, and we're done. And you're like, well, Wayne, how do you know it's going to come back 50%? Oh, I don't. And in fact, I didn't even use Fibonacci there. But I just showed you it's a perfect Fibonacci retracement. Well, yeah, but it's the same thing. What I did is I analyzed where the old support was, and I put a limit order just in front of it. But then you're like, well, Wayne, how do you know if it was a Fibonacci, how do you know it wasn't a 3A2 versus a 50%? Well, of course, you don't know at all. So if you think it's really aggressive and you'd rather have a 50% or a 3A2 than a 50%, well, then put it there. Or put it where the moving average is. At the time, this would have been a 21 and this would have been a 55, but whatever. But the one I use the most is roll reversals. I use price action. So I say, well, that is the old support and it'll probably become resistance in the future. And I want to be in just before that. So I'll drag it. That's it. I'm done. Dude, like it's not more complicated. You know what's more complicated? Getting your ass out of bed to do it. That's the hard part. But the logic, notice there's no pivot points here. We're not talking about Fed meetings. Oh, we can improve upon this. Okay? We can improve upon this. But if you can't do this, you're not going to be successful trading. So, does Elliott Wave work? Yeah. Look. Does Fibonacci work? Yeah. Look. Does price action work? Yeah. Look. Do moving averages work? Yeah. Look. Are Forex traders successful if they use all these techniques? Yeah, but they don't. Okay. Okay. So I would never trade because it's a pivot point. I would never trade because it's a 50%. I wouldn't trade because it's a roll reversal. But it's good to know all of these things so you can incorporate them into a strategy. Okay. Sorry, I've taken up too much of your time. I apologize. Okay. So that's how you do it. I better remove that order. And then you can add layers of complication on top of that. What holds people back is they don't do the work. Are people, traders, smart enough? Yes. Do you need to be a rocket surgeon? No. Do you have to have a ridiculous, sickening work ethic? Absolutely. I'm mentoring a young person right now, not as a trader, but as a human being. He made a lot of mistakes in the early part of his life. Now he hasn't matured. He's right between the ages of 15 and 30. He hasn't matured. So, invite him over to the house. And we're going to have a little mentoring session. So I gave him a shovel and a pickaxe and a wheelbarrow. And I said, dig a hole. And he said, how big of a hole? I said, well, go slow, go steady. You can take breaks, but I want you to dig a hole for 8 hours. When we met again, he came back, and I had a load of topsoil delivered, a whole dump truck, 7 yards. He's like, so what do you want? What are we going to do today? I said, I want you to fill the hole. I'm not joking. 7 yards. A yard is 3 feet by 3 feet by 3 feet times 7. Fill it. Okay? Look, to me, it's about the work ethic and consistency. I think once you know these basic rules that FX Bootcamp will teach you. By the way, this is why it's $88. If you don't pay the $88, I can't help you. You don't have $88? I can't help you. Sorry. Okay. Yeah, it's really actually a really nice shovel, actually, Barry. I actually have like 4 beautiful shovels. Okay. Yes, Famobix is very close to a cubic meter, but that's the difference between a meter and a yard. Yes. It's a little bit less. So imagine, let's say 6.5 cubic meters. It's a lot. It's as much as you can put into a large dump truck. So anyways, I think you can learn the basic rules pretty quickly. And then you can work with live groups on practicing implementing the techniques in the live market. This is what FX Bootcamp does. But ultimately, people don't do the work. Okay? Burned, go to the FX Bootcamp YouTube channel. It's youtube.com/FX Bootcamp. And there's an entire training course for free that outlines all the tools and techniques that I use, especially the moving averages. And it gives you all the settings for all the oscillators. Burned, you're going to see my classic template that looks like this. Okay? Okay? For example, come on. Okay? Yeah, that's what I thought. But if I put it here, no, I have to do it. All right. Let's pick on some of these. See how they run, see how they run. Okay, like for example, you'll have to learn how to use an oscillator properly. Okay, because I think many gurus don't understand and they teach like sell all oscillators when they cross over. Wrong. Oops, I deleted the wrong thing. But anyways, you can use it shows a setup of moving averages. It shows a setup of oscillators. Probably even teaches you how to use them. I'm not holding back. Okay? Not holding back. You should know how to use the basic tools and use it right. Okay? Right on, Matrix. Okay. So go ahead and use that. Cool. So I'll leave you to it, guys. I'm not trying to say anyone's bad or stupid or lazy. If you heard that message, I am trying to appeal to a different emotion. But if you get offended by the message I was giving, you need to turn that off. That's your ego. And it's not the good ego, it's the bad ego. It's egotism. And I'm challenging the vision of yourself where you're like, I'm special and I'm supposed to be successful at this. I'm special. I know I'm going to be successful. And he's telling me the reason I'm not successful is that I'm lazy or I'm stupid. And I get mad when he says that. Dude, turn the negativity off. You're creating this dialogue in your brain, and it's not helpful because it's around this image that you've given yourself that you're going to be naturally successful. That's egotism. Your view of yourself is not attached to reality, and therefore, anytime you get challenged with potential failure, it's breaking down the whole vision of yourself. Oh, dude, you got a lot riding on this. Oh my God, your entire self-worth is based on you being able to easily succeed at this because you have some natural ability. Oh my God, you're very disconnected. Holy smokes, you got to turn that off. Now, I do think you can be successful here. I don't think it's going to be natural. I don't think it's going to be easy, but I also don't think it needs to be complicated. And you'll need to disconnect yourself from your false visions of grandeur. And instead say, okay, I can do this, and it's going to come down to time and some energy and focus on chunks of behavior, because the techniques themselves and the tools themselves don't have to be that complicated. But, like shooting a basketball isn't that complicated. You can learn the techniques. It just takes a lot of practice to do it better than most people. So you got to put in the time, and you got to have the passion. But ultimately, right? Baseball. Throw the ball, catch the ball, hit the ball. Golf. Try to not hit the ball high and to the right. Right? Like golf. What's the whole thing about golf? Hit it far and straight. And then putt it into the hole. And use, less strokes than everybody else. Okay, pretty straightforward, right? Obviously, you got to put some time into the practice and the technique and the skill. And I want you to focus on that. Okay? Not just playing golf, but practicing golf and improving in golf and perfecting golf, all the while loving golf. And then when you go out and play, every time you play, you get better because you put time into practice. So for example, if you go to university and you sit through a 2-hour lecture, there's going to be 6 hours of study and another 3 hours of work. Now, the study, you say, well, isn't the study the work? You have to do the work they assign and study, but there's always going to be papers and group work and all that kind of stuff. So it's somewhere between 5 and 6 to 1. Lecture, and then you go off on your own. So you could argue, let's say dumb it down, for every 1 hour of lecture, then you go back to your dorm and you work for 5 hours on that one subject. You might have 7 classes. Okay? 14 hours a week of classes, and let's just say somewhere between 40 and 50 hours of study. Yeah, that's what university is called. So imagine for every hour you spend trading, you should be spending 5 hours on learning how to trade, practicing your trading, doing fundamental research, thinking about your trading, all that kind of stuff, if you're going to improve. But if you just show up every day and throw down a bunch of trades and you're like, eventually you're going to get this, you're so wrong. You're focused on the wrong things. You're focused on your natural ability. I'm going to piss you off again. That's what an 8-year-old would do. No, Daddy, I got it. I want to do it. I want to do it myself. Okay? The highest performing athletes and the highest performing business people have coaches and consultants. They actively seek out help. Okay? They actively seek out like-minded people, and they surround themselves with ridiculous, sickening work ethic and visionaries, interesting people doing interesting things. And that's what you want. Okay? So don't make it more complicated. Break it down into pieces. Take all the information I shared with you today. Break it down. Write bullet points. Did you take notes? Right? You can break this down. Point number 1. Okay? Point number 2. Point number 3. Point number 4. And then breaking down your plan for the week to do more research on one. Then do next week number 2, next week number 3, next week number 4. Be more serious than everyone. I mean, just think of it. Everyone here, but then all the other retail Forex traders. You need to do more serious work and analysis of all of this than anyone. And you have to recognize you're not going to do it naturally. And just trading won't make you better, because that's assume you're naturally going to figure it all out. Why would you do that? It's so dumb. So instead, break it down and start your mastery. Break it down into pieces. Put it into order. Spend time. And then when you master all these pieces, it comes together with simplicity. I'm not saying a 17-step process. Study some price action. Study some Fibonacci if you want. If you want to do Elliott Wave, do some Elliott Wave. But this isn't complicated. But it does require hard work, ridiculous, sickening work ethic. Every day, without fail, every day. Is it raining? Is it flooding? Is there a drought? Is there tornadoes? Is there a hurricane? Is there a typhoon? Is there an earthquake? Is the house on fire? Trade. Oh, you feel sick today. Trade. Oh, I'm exhausted. Oh, I totally understand. Trade. Okay? And if you're not actually physically doing it, you're mentally preparing. You're like Michael Jordan, envisioning how he's going to play against his opponents before the game has started. Or the Blue Angels sitting at a conference room table, flying the air show before they even get into the airplane. When I coached a science Olympiad team. We were doing engineering, mechanical engineering. We were building bridges out of straws. Okay? And we're talking, what, 6th graders, I think? And before their first tournament, I had them build the bridge with their eyes closed. Not physically. We're like minutes away from going in and building their first bridge in competition in a room full of other bridge builders, timed and people, adults watching and all these rules. It's a lot of pressure for a young kid. So I said, hey, calm down, feel your heartbeat. Let's sit here. Okay, close your eyes. Okay. There's scissors on the table. There's tape on the table. There's a yardstick on the table. There are straws. Who grabs the straws? Oh, that's him. Who grabs the tape? That's him. Okay, what happens first? All right, the guy with the straws breaks it down. These 7 straws are going to go here. These 13 straws are going to go there. These 8 straws are going to go there. So you organize them. Okay, that one goes for the strut. That goes for the side. Okay, what's the person with the tape doing? Well, we want as much tape as possible for this first step. Take the scissors, cut the tape in half. So now you have twice as much tape, just half as thick. Great. And then we break those into smaller pieces. How many pieces are we going to need? We're going to need 15 pieces of tape this long on that there. So you organize it. So one person's doing the tape. One person organizes the straws. We put it all together. Boop, boop, boop. Visualizing before they even walked into the room. You know what happened to that team that I coached? They won the sub-regional. They won the regional. They won the super regional. They got invited to the state championship. Over 100 teams that all won their regionals. So now we're talking about 30,000, no, not 30, more than 10,000 competitors that started this whole process. And we get down to the last 100 teams. And those 2 kids I coached won the state championship, number 1. Out of tens of thousands of kids. They could do it with their mind. That's how important it is for practice. I have a t-shirt when I was a coach. What does it say? It says, act like a champion, except act is in the word of practice. Practice like a champion. And I coached them. I said, you only go to the tournaments to inspire other kids to be great, because you're going to make it look easy because of the ridiculous, sickening work ethic that you have and how many times we practiced. I said, you're going to inspire kids and other teams to be better and build a better bridge. But you're just showing up to inspire them and pick up the award. No joke. This was the speech. So it works for a 10-year-old. It works for a 50-year-old. Don't make it complicated. Just perfect what you do. Don't meditate and let all the stress just dissipate into the universe. No, hyper-focus on every single little detail and master every single detail. And then you'll get this unbelievable clarity. But even then, you have to deal with fundamental data changing fundamental trends and randomness inside a very complex market. In fact, the financial markets are some of the most complicated things to measure. So what you can do is control your behavior through your hard work and analysis and decision-making process. But if you roll into a market and you're winging it, you will fail. So go ahead and fail or stop winging it. Go ahead and fail or step up and focus. Go ahead and fail and be challenged by your super ego about how naturally amazing you are and how easy Forex is going to be for you to succeed, turn that message off and instead just say, you can do this, you're capable of doing this, and then instead focus on your ridiculous, sickening work ethic, not the success that you're supposed to get in the yellow Lamborghinis and the girls in bikinis and all that. Instead, focus on the work ethic. What more can you do today in order to master technical and fundamental analysis and your trader psychology? What more can you do? What could you do to contribute to that success? What value can you create for your Forex trading business today? That's what it takes. That's the mindset. Rolling into your charts every morning going, what's up, fellas? What are we trading today? Oh, look at that. Oh, look at that. I think I'll buy now. That's just an epic fail. Okay? I run FX Bootcamp, not Fail Army. Peace on earth. May the pips be with you. May our profits be above average. Hey, if you're in my sync trading group, I see you at 4. We're going to plan out all next week. What an amazing day. Cheers.